Hey everyone, in this video I've got one AI stock that's down 52% off its high that you might regret not buying on this dip. What is this AI stock? It is Datadog, the cloud observability solutions leader. The company recently launched new products and services that uses artificial intelligence to make its existing services more effective. That's certainly going to increase demand from end users that can now interact with the platform conversationally, which makes it exposed to more potential users that can benefit from this technology. So I'm going to highlight its revenue, its profit margin, its cash flow, and valuation to highlight why I think this is one AI stock that you can buy right now. Starting with revenue, looking at its trailing 12-month revenue at 1.9 billion. That's up significantly from the around 350 million in revenue it was generating around 2019. So the company is growing, finding new customers, and existing customers are increasing their spending year over year with Datadog. And that results in its increasing or higher than 100% revenue retention rate. That means existing customers 1 year, in the following year, they spend more money with Datadog. And to me, that represents a good return on investment. Because if clients weren't seeing a good return on investment, they wouldn't increase spending with Datadog. So I always look at that as a harbinger for a company's success longer term. The other thing I'm going to highlight is its operating profit margin. And you can see volatility here up and down with its operating profit margin. But if you go back to 2019 and you draw a trend line here to 2023, you can see an upward sloping operating profit margin getting closer to profitability on the bottom line. While it's not there yet at negative 6.84%, you can see progress on that front. And now that it launched the new product, all that research and development spending that was going into launching this new product, it can now start to reap the benefits of those investments. So it remains to be seen, and it's reasonable to expect Datadog's operating profit margin to start moving upwards from here, at least in the near term. And another reason why I think this stock is an excellent buy right now is its excellent progress growing cash flow from operations, especially given the higher cost of capital environment that we're operating in. Self-sustaining businesses are earning a premium, and Datadog is certainly doing that. 485 million in cash flow from operations in the most recent trailing 12 months. That's up from barely positive around 2020. So it's made very nice progress on this front. And if we look at this percentage, it's generating 485 million in cash flow from operations on revenue of just 1.9 billion. So it's doing a good job converting this revenue into cash flow, and that's always a good sign for a business longer term. And finally, the stock is not prohibitively expensive. What I have here is the forward price to earnings ratio, and given the discount, given the stock price decline, Datadog is selling at near its cheapest valuation going back to January of 2022 at a forward PE of 59. Looking at the forward PE on itself, it doesn't look cheap, but when you compare the forward PE with the growth in revenue, in cash flow, and in profitability, that's what makes the stock look like a bargain, is the growth in relation to the valuation. All right, so that's why I think Datadog is one AI stock that you might regret not buying on this huge dip.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.